One advantage of investing in stocks is that you do not need a finance degree to do so. If you spent a lot of time becoming an expert stock market analyst or an excellent equity analyst, you can opt for simple low-cost broad-based index funds, such as those that replicate the S&P 500. Investing in stocks is not perfect for every person in every situation. However, it is a great way to hedge your risk, and by investing in an asset class you can ensure that you are not overexposed to risk. The pros of investing are: 1. Grow with the economy. 2. Stay ahead of inflation. 3. Easy to buy and sell. 4. Easy to access. 5. It's a way to make money while you're sleeping without having to set up a business of your own. 6. You can make money on the way up by simply buying and on the way down by shorting a stock. 7. You can invest as much money as you want. The cons of investing are: 1. Risk losing all your money. 2. It requires time to research. 3. Emotional ups and downs. 4. Professional competition. 5. Brokerage commissions eat up your profits. Pro. Tax. In return for owning a small part of a company or its shares, you get access to the profits that the company generates in the form of dividends. This is useful because you don't have to worry about paying tax on the money you earn. If you invest in a Roth IRA, for example, you can pay tax on any money that you put into your current tax bracket, but if you withdraw it, you will no longer be liable for tax. Other aspects of investing. Investors such as Warren Buffett have shown that one can be rich by investing in the stock market, where you buy and hold rather than short-term. Instead of large-cap stocks, investors can invest in smaller companies that have the potential to grow big in the future. Even if a company does not pay a dividend, investors benefit from a higher share price because the return value is reinvested in the company and a distribution is made to investors. Outside of the general pros and cons, each type of investment has its own potential benefits and risks. All kinds of investments, from the stock exchange to real estate to gold coins, carry a certain amount of risk. However, equities have delivered one of the highest long-term historical returns among the various asset classes. This means you can sell your shares and still have access to the underlying dollar value you need. Unlike many other investments where you have to wait days, months, or even years, stocks can be purchased and sold in seconds. It is best to have different company sizes, as they develop differently at each stage of the business cycle. Diversification allows you to profit from growth and be less vulnerable to a stock. They can also monitor the stock market themselves to make the most of a company's decline during a market correction, market crash, or bear market. When it comes to investing, many are prepared for failure because they do not understand what they are investing in. The downside of investing in stocks is that you can lose your money if you don't know what you're doing. Whether you are a first-time investor or long-term moneymaker seeking to weigh up new options, you may be wondering if the stock market is the right place to take your next step. The idea of investing in the market can be intimidating, but it can be a great way to make money if you know what to do with it. Using the market as an example, you can invest in the US stock market, but depending on market conditions, you could be on a roller coaster that could lead to either losses or profits. Before you dip your toes into the stock market, make sure you do your research on the stocks you want to invest in. The advantages and disadvantages of investing in stocks depend on your source of information, and you may hear too much from one side and too little from the other. Over a long period of time, you can accumulate large assets in stocks, and the stock market has an average annual return of 7 to 8%. Bonds offer lower returns than shares and real estate, but higher than savings accounts. Stocks are a great place for investors to invest their money. It's important to keep educating yourself, so stay tuned for more. A video a week making you 1% smarter accounts for 52% a year.